selling internationally sounds exciting. More customers, more markets, more growth. But if your payment setup is wrong, global sales can quietly eat into your margins through FX fees, cross-border charges, failed payments, and messy reconciliation. A lot of businesses choose payment gateways based only on the headline processing fee. But this article makes a bigger point. For international business, your payment gateway affects profit margins, approval rates, fraud risk, refund and chargeback costs, customer trust, and even how fast you get paid. In this video, we'll break down what really matters when choosing a payment gateway for international business, compare Stripe, Adyen, and PayPal, and look at how to reduce the real cost of getting paid globally. And if you want more practical business insights like this, subscribe to KonexusHub. The article starts by challenging a common mistake, comparing gateways only on the listed card rate. In practice, international payments usually include 4 cost layers: the processing fee, any international surcharge, currency conversion costs, and disputes or chargebacks. That matters because FX and cross-border fees can become the real margin killer. For example, the article notes that Stripe may apply extra fees when currency conversion is required, and PayPal can add both an international transaction surcharge and an FX spread on top of base pricing. So the first lesson is simple: do not evaluate a payment gateway on the headline fee alone. Look at your blended cost across the full transaction lifecycle. Once you understand the cost structure, the next step is comparing the main players properly. The article positions Stripe as the strongest fit for modern SaaS and developer-first businesses. It highlights Stripe's fast setup, strong API ecosystem, and broader product suite, including tools like billing, tax, and radar. It also notes Stripe's clearly stated baseline pricing in some markets, like 2.9% plus 30 cents in the US context. Adyen, on the other hand, is presented as the enterprise-grade option for high-volume, multi-country commerce. The article explains that Adyen often uses an interchange plus pricing structure, where fees are broken into interchange, scheme fees, and Adyen's own markup, rather than one flat public rate. That can be harder to estimate up front, but potentially very competitive at scale. And then there is PayPal. The article frames PayPal as a strong trust and conversion play, especially when buyers already prefer the PayPal wallet. But it also warns that PayPal can become more expensive once international commercial fees and FX conversion spreads are added in. So the best gateway is not universal. It depends on your volume, your customers, your currencies, and how complex your finance operations are. But fees are only part of the story. Global payments also affect revenue in less obvious ways. One major factor the article highlights is local payment method support. International buyers do not always want to pay by card. In many regions, they expect bank transfers, local wallets, or buy now pay later options. The article says Stripe offers a strong catalog of methods in many regions. Adyen is strong on enterprise-grade orchestration, and PayPal is strongest where the wallet itself is preferred. The next factor is approval rates and routing. For high-volume businesses, improving authorization rates can sometimes create more revenue than shaving a few basis points off fees. The article specifically notes that Adyen is built around enterprise-grade acquiring and optimization, while Stripe also offers strong tooling and network effects. And then there is reconciliation and reporting. This becomes especially important once a business operates in multiple countries or entities. The article describes Adyen as a strong option for deep enterprise reconciliation, Stripe is strong for startups that want speed and clean reporting, and PayPal as less flexible for more complex multi-entity setups. So if you were choosing a gateway for international growth, ask more than what is the fee. Also ask, can this provider support local payment behavior? Can it improve approval rates? And can my finance team actually work with the reporting? Once you understand these trade-offs, choosing starts to get a lot easier. The article gives a very practical framework. Choose Stripe if you are a B2B SaaS or digital-first business, want fast implementation, value APIs and integrations, and can manage FX intelligently, for example by settling in major currencies when possible. Choose Adyen if you process high volumes, operate across many markets, want enterprise-grade global acquiring, and have enough scale to benefit from more negotiated economics and finance operations depth. Choose PayPal if your customers strongly trust PayPal, if wallet usage helps conversion, and if you are willing to accept a higher blended fee in exchange for convenience and buyer confidence. That makes this less of a winner-takes-all decision and more of a fit question. A startup selling software globally may love Stripe. A large international merchant may get more value from Adyen. And a business targeting audiences who love wallet-based checkout may still benefit from PayPal. And whichever provider you choose, there are still ways to reduce your real payment costs. The article offers several practical actions. First, minimize FX conversions. Whenever possible, settle in the same currencies you sell in. The article emphasizes that repeated currency conversion is often where costs stack up fastest. Second, offer local payment methods in high-volume regions. This can improve acceptance and reduce dependence on card rails alone. Third, use smart routing and approval optimization if you operate at higher scale. The article notes that for larger merchants, improving approval rates and retry logic can raise revenue more than obsessing over tiny fee differences. And fourth, track your blended cost weekly. The article recommends building a simple dashboard that includes total processed volume, total fees, FX costs, disputes, and net revenue. That gives you a much more realistic picture of payment performance than just reading fee tables. Here are the big takeaways. First, the best payment gateway for international business is not just about the lowest processing fee. FX, cross-border charges, disputes, approval rates, and reporting all matter. Second, Stripe, Adyen, and PayPal each serve different business models. Stripe for modern digital businesses, Adyen for enterprise-grade global scale, and PayPal for trust-heavy wallet conversion. Third, local payment methods, approval optimization, and finance-friendly reconciliation can have as much impact on growth as the fee structure itself. And fourth, the smartest businesses track blended cost, not just listed pricing. The main message of the article is simple: there is no universal best payment gateway for international business. There is only the best fit based on your size, markets, currencies, and operational needs. So before choosing a provider, look beyond the headline rate. Understand where your payment costs really come from, how your customers prefer to pay, and what your team needs operationally as you scale. If you found this useful, subscribe to KonexusHub for more practical content on finance, tools, and business growth. And check the links for more resources to help you collect payments globally with more confidence.